Yeah, so welcome to the podcast.
Thank you for having me on.
What I'll do then is introduce you and then we'll crack on. But I'm planning on being really, really transparent with everything I'm doing. So I'm going to explain that you've had questions beforehand, that you've edited them. So actually, we'll chat through those questions and the whole purpose of this. So I will kick off with an introduction now. Hopefully, I won't fluff it. Welcome to the Think Property podcast. My name is Edward A.B. I'm a retired chartered surveyor and RICS registered valuer, and up until very recently I was head of investment finance for a property division of a FTSE 100 listed company. And the whole purpose of this podcast is that all the way through my career, the most fun and the most rewarding aspects of the work I've done have always been around assisting private individuals who are investing in property. Most often that is commercial property, but sometimes that has been residential development, commercial development, and straightforward direct residential investment. Today's podcast, though, has a specific nuance to it. We're talking with Nathan Bridgeman of Seabridge SSAS, and Nathan is something of an expert in the setup, administration, management, in fact, everything to do with SSAS. And I think for the purposes of transparency, I'm just going to explain that I have given Nathan a list of 10 to 12 questions as a little bit of a guide for the conversation we're going to have today. Nathan, welcome to the podcast.
Thank you very much for having me on, Edward.
Well, it's fantastic you're here, and thank you. And I know that you have seen those questions because you wanted to adapt them a bit.
Yes.
I haven't seen your adaptations at all, but I think if I ask you a question from that list, we'll go in the order of that list. Really, the whole purpose of this exercise is to help anyone that is thinking about commercial property and a SSAS to understand more about the process, the costs, what's involved, and potentially they'll be picking up the phone to you afterwards. So we'll make sure there's a nice big fat plug at the end where you can leave your details and in the show notes as well for you to be able to be contactable afterwards. But really the idea here is to aim and help and assist anyone. So look, should we crack on? I think first of all, before we dive sort of headlong in, Nathan, you run Seabridge with Debbie Seaton. How long have you both been involved in the pension world, first of all, and then the SSAS world?
Okay, so Debbie's been involved in SSASs for over 30 years. I'm in my 28th year of being a SSAS pensioner trustee, scheme administrator, doing all things SSAS, helping accountants, financial advisors and clients with SSAS work. So together we've sort of got 58 odd years experience between us, and then when you extend that to the wider team, it's hundreds of years of experience of SSASs when you look at our senior SSAS managers.
Awesome, thank you.
And Seabridge itself is 3 years old, so we wanted to do something different in the SSAS space. We saw an opportunity for a more modern SSAS business that embraced technology but delivered a really personalised service that just wasn't out there. So me and Debbie established Seabridge SSAS 3 years ago. So we're now in our 4th year of trading.
And when you say, and I'm going to dig down into a few details straight away if I may. When you say personalised service, what does that mean? How does that manifest itself for anyone now that is thinking, oh, I've heard a bit about SSAS. Why should I go to Seabridge? Why should I not go to one of the older, bigger, more established operators out there?
Yeah, I think with property, it's so personal to the individual and every property is very different. What we found was a lot of pension providers had been sold to the big consolidators, and they're running thousands, hundreds of thousands of these types of schemes, and clients tend to become just a number. Whereas what we aimed to do is offer this private client service where no administrator, no senior SSAS administrator administers more than 50 schemes. So that way they get to know the individual clients, they get to know their trusted advisors and how they like to work. And they're property experts, they understand all the nuances of property, which you just don't get if you're running hundreds of thousands of these types of schemes. So at Seabridge, we only run 260 SSASs, and we're probably only going to go up to about 1,000 SSASs. We've put that as a cap so that we can keep control. We, as directors, we oversee every single scheme, and we know every single client on our books. We've spoken to every single client. We have a trustee meeting with them every year. So every client of ours has a senior SSAS administrator looking after the day-to-day running of their SSAS and a director overseeing it. And I think that's the only way to run SSASs, because there are a lot of moving parts. There's a lot of complexity. Legislation is always changing, and you really, really need that attention to detail, because they are multi-member schemes, often with property, often with gearing, often with complex situations, because we're dealing with them and we're dealing with the sponsoring employer, the sponsoring company that sponsors the SSAS.
That's perfect. That's really, really clear. And actually, there are two things there that I really like. That's a really interesting business model that you've identified, that cap of 1,000 already. Actually, I think some people will find that incredibly reassuring. The other thing is that I wouldn't expect you to speak about this, because actually you're in the business and you're extremely professional, but I have the wonderful benefit of being completely impartial. So I can speak a bit more to that sort of the competition that is on the bigger side, shall we say. And I've got the benefit of experience of having worked for one of those sort of massive warehouse type operators with, at the time, there were 6,300 properties under administration. And yeah, I can speak to the fact that there was simply no way, even with the best will in the world, that anyone in that company could possibly have actually given an expert service or a high degree of knowledgeable service to all of those 6,300 plus properties. So I think your offer is now sort of really clearly defined. Probably moving on then, it makes a lot of sense, even for those listeners out there who are thinking, well, I know what a SSAS is. It probably makes a lot of sense. Just, if you wouldn't mind, just could you please clarify or explain exactly what a SSAS is and how it differs from other pension schemes, particularly a SIP or something like that?
Yeah, of course. A SSAS, SSAS, stands for Small Self-Administered Scheme. The small part refers that it has a maximum of 11 members. Self-administered, clients can make their own investment decisions and have the maximum flexibility when it comes to investment. Our only rules are HMRC's pension tax manual. So everything I talk about with SSAS is approved, signed off by the revenue. We're very cautious, non-contentious. We don't sail close to the wind, so we're one of the few people with a totally clean SSAS book with no exposure to taxable investments or unauthorised payments. So a SSAS is an occupational scheme, primarily for company directors, so you have to have a limited company to be able to sponsor a SSAS because it's an occupational scheme. So they're obviously not for everyone. They're for small business owners, medium business owners, SMEs, entrepreneurs, people that are looking primarily to buy commercial property. 99% of our clients have a SSAS to own land or commercial property.
So does that then come on to one of the main advantages? So actually, you had nonsense. I'll cut to the chase. What are the main advantages of a SSAS?
Yes. Main advantages of a SSAS are that for company directors looking to build their pension fund, they probably give you the most flexibility and most control and security in the pension world, because we call them a family pension trust, because often they're family businesses that set these things up, and the assets can pass down the generations within a trust. If you contrast it with something like a SIP, the owner of the asset is the pension provider. With a SSAS, it's your own trust, individually registered with HMRC, so the owner of the asset are the member trustees. The clients own the assets. So if you're looking to buy property, it's incredibly secure in terms of being on title, owning the assets and having control of that property. What Seabridge do, their function really is a bit like an accountant. It's to keep you compliant, in football terms, to keep you on side with the rules, so that you're always on side with HMRC, with the pension regulator, which is the regulator of occupational pension schemes, and with the ICO, the Information Commission Officer. So whilst Seabridge SSAS or companies like us have liability as the scheme administrator, with HMRC as the professional pensioner trustee, it's the clients that get to make the decisions. And the really nice thing is it's their own trust. So regardless of what happens to Seabridge SSAS, if we were no longer existed, you can just appoint, as you would with another accountant, another scheme administrator to do the pension scheme returns, the reporting, the reconciliation to the pension regulator. So your pension stays there forever. And we've got SSASs that were set up in the mid-70s that we look after now, that we've taken over the administration on. So SSASs have been around since the 1973-74. So they're 50 years old, SSASs. So tried and tested, very robust, massively underrated, massively underused by financial advisors and professional advisors, but probably the most flexible pension scheme out there for company directors to be able to buy their commercial premises or buy commercial property and land, and also lend money back to their business. So it's a very, very good tool to be able to lend money from the pension scheme to the business. They're quite unique in being able to do that.
Okay, thank you. That's really clear. And actually, you've used the word massive there, and I'm about to be massively unprofessional by deviating slightly from script. And this isn't by no means intended to be a curveball, but you've said that SSASs have been around since the 1970s, and you've also talked about a way of lending money from your SSAS, that sort of thing. And I just want to cut to the chase that there seem to be a lot of I'm not asking you to name names.
No, I won't.
At all. I will qualify the question, but it seems to me that on LinkedIn, on Instagram, there are quite a lot of characters in the world right now who are touting, it seems, SSAS and this opportunity, and yet their motive seems to be a little bit, shall we say, morally dubious, going on that lending angle straight away, maybe representing developers and deliberately targeting SSAS companies or SSAS pension schemes, saying, hey, lend money to this development site. Is there any sort of kite marking or any way that a random punter interested in a SSAS like me can have a bit of confidence that they're actually in safe hands?
Yeah. I think our professional body, AMPS, the Association of Member Directed Pension Schemes, they're very careful on who they actually let in as members of AMPS. And my business partner, Debbie Seaton's honorary secretary of AMPS, so full disclosure, I will be biased because obviously AMPS, as well as being our professional body, Debbie sits on the committee. But AMPS gives a certain sort of kite mark, if you like. I think the other thing, and the most important thing here, is clients should only be dealing with a scheme administrator. And I make the distinction of administrator with a capital A because there are people online, there are people that are practitioners or consultants. And the issue with that is they often, not always, but they often haven't got skin in the game. They aren't taking liability and there's very little recourse. So if things go wrong, then it's Seabridge's neck on the block with HMRC. And we've obviously got a vested interest because of our reputation, and we've been doing this a long time, and I'm only 46, so I'm going to probably be doing it for another 20, 30 years. But we've been doing this for a long time. We've got a reputation to protect, but not just that, we've got financial risk because it will be us that pay unauthorised payment charges, scheme sanction charges, and us that get dragged through the press with HMRC. There's a lot of faceless operators out there that their primary motive, as you've quite rightly identified, is to sell an investment first. Well, we don't have that. We don't give any investment advice. We don't give any financial advice. We haven't got any kind of property to sell. We are just purely there to administer somebody's SSAS and for them to use trusted FCA regulated advisors, chartered accountants, chartered tax advisors, chartered financial planners that can give good advice on what should go in the SSAS. So whilst we know the 200,000 pages of pension tax manual, it's a financial advisor's job to know his client, know their risk profile, know their capacity for loss, know what good investments are and where to invest, but also to give ongoing tax advice, financial planning advice, to be able to guide the client and give an overview of where the SSAS fits into the financial planning piece for the client.
Considering that was a complete curveball, that was an exceptionally comprehensive answer. Thank you. Right, shall we get back on track? So my third question to you was, I'm obviously just as a layman prepared or reasonably aware of what sort of pension contributions I can make into my, shall we say, normal pension.
Yeah.
Which is, I think, administered by L&G and one by Vanguard. So I've got a reasonable idea there, but I don't have a SAS yet.
Yeah.
What's the
we can change that for you.
Yeah. What's the contribution structure for a SAS, and are there any limits?
Yeah, there are limits, and that's one of the issues. This answer might change on the 30th of October with the budget that's coming up. So all I can tell you is at the moment there's an annual allowance which is what each individual can pay into their SAS, and that for most people is £60,000. For high earners or people in drawdown, flexi access drawdown, that may be lower. There is also the ability to do something called carry forward, which means you can go back 3 years and mop up any unused relief. So as we always say, talk to your accountant. You've got to be earning that level of income to be able to pay it into your scheme. So, and making sure you're getting full tax relief. With a SAS, contributions usually come from the company because it's fully tax deductible. So for people with a limited company, they will pay the contribution. So there will be no NI on the contribution unless they change that in the 30th of October. There's no NI on the contribution. Money can be paid from the limited company in respect of the members of the SAS. And as I say, this year it's £60,000 as a maximum annual allowance.
Okay.
And that's fully tax deductible. So it's wholly and exclusively for business purposes. Corporation tax relief is granted immediately. And if the overall contribution is below £500,000, then it's immediate corporation tax relief with no spreading. And those are money purchase SSASs or money purchase rules. So it's the same for a SIP and the same for a personal pension. So your L&G pension with Vanguard has exactly the same rules. The rules are fairly similar following pension simplification across the brook. There's just some slight nuances and slight differences with SSASs and SIPs and things like that.
Okay, here's a proper Muppet question, but I just want to clarify.
No such thing.
There's a benefit of having a commercial property in a SAS. You cited that £60,000 maximum contribution figure. If a commercial property in a SAS is bringing in rent from the tenant that occupies that building, does that rental income that is subsequently paid into the SAS contribute or form part of that contribution?
No, that's growth. That's the same as you would get with your Vanguard fund. I'm sure there's dividends coming in on all the underlying shares. That's just growth. So outside of that, we're talking about fresh and new pension input coming in from either the employee or the employer into the scheme. Growth is separate. So rental income can be as many millions of pounds as you want it to be. It doesn't affect the annual allowance and putting in fresh contributions.
So developing this on then, I'm deviating from script again, but developing this on, you could in theory have a portfolio of commercial properties?
We've got our largest SAS is £80 million, set up in the 70s, has a huge portfolio of commercial property. Residential planning permission has been granted. Assets have been sold, land has been sold. There's no CGT in a SAS. There's no IHT in a SAS. So it's an incredibly powerful vehicle to shelter money from tax in a family pension trust. And I think SAS is sort of a bad name for things. We should call them family pension trusts because most of our SSASs bring in younger members. So you have to be 18 to join a SAS, but often children of the original founders of the company, the original members of the SAS, they're now in their second and third generation. As my biggest SAS is, I've got quite a few SSASs that are over £50 million because they've benefited from compounding. Rent has been invested into stocks and shares. New contributions are going in every year for members. So there's max funding going in. There's lots of input in terms of dividends and rental income all going in that pot over a 40, 50 year period. Okay,
you mentioned generations coming in.
Yes.
From the age of 18. Does that infer on them responsibilities of being a SAS trustee?
Yeah, that's why you have to be 18, because every member of a SSAS is a trustee. So you have to be a member trustee. Therefore, SSASs have got a slight disadvantage to SIPs in that a SIP, for example, or a personal pension, your L&G pension, a newborn baby can have a pension, and grandparents can pay in contributions up to 3,600 or 2,808 net into a SIP. In a SSAS, you do have to be 18 to join the SSAS. So they're not for minors.
What are the key responsibilities of a trustee?
Nowadays, in terms of member trustee, I think one of the biggest issues we often have is knowing what hat you're wearing, because you're wearing a hat as a business owner and a director of the sponsoring employer of the SSAS, but you're also wearing a hat as a member trustee, and you have to do things for the benefit of the pension scheme and not just the business. The pension scheme isn't there just to avoid tax and to get money out of the business. The pension is there to prudently invest and supply retirement income. So you just have to make sure you know what hat you're wearing. It's not usually an issue, because as a professional trustee, we have a fiduciary responsibility to make sure everything is being done correctly, so can guide and advise on things being done compliantly so that the scheme functions in a really responsible manner.
Really clear, very helpful. I know we're covering so much ground already, and we're what, sort of 4 or so sort of rough questions in. So I think this is phenomenal. Maybe at this juncture, do you have, or maybe you could create one, do you have some sort of FAQs or fact sheet that can help a complete beginner get into and understand the nuance of SSAS?
Yes, we can supply that. That's fine.
And is that on your website? Can it be accessed off your website? Or what's the easiest way for someone to actually contact you and sort of look you up after this?
Okay, so yeah, you can reach us, come through to us directly. You'll see on our website all of our details. We've got an inquiry form to fill in, but equally our numbers are on there. We're very, very approachable people. The whole team are, so you can speak to anybody at Seabridge SSAS, email us or phone us, whatever suits, and we'll treat you as an individual, because, as I say, every scenario is different. There's no two SSASs the same. So we have people that like to meet face to face. We have people that like to do Microsoft Teams or Zoom calls. Whatever way you like to work, we can accommodate, and we deal with all kinds of different people, different businesses, different age groups. It doesn't matter, from young tech entrepreneurs that have made a fortune as a YouTuber, through to people that have got a 100-year-old factory and been in engineering for that time. We deal with all different shapes and sizes. So yeah, whatever way you like to work, you can just get hold of us. And the one thing we pride ourselves on is being really, really prompt and efficient. So we will always get back to you as soon as we can.
And your website URL is what? It's Seabridge. I'm going to put my neck on the block. SEABRIDGESS.
It's seabridgesas.co.uk. So it's SEABRIDGE, and SAS is SSAS.co.uk. If you type in Seabridge SSAS into Google, you will find us, because we're the only Seabridge SSAS. Yeah. Awesome. And the Seabridge, the SEA being Seaton, Debbie's surname, and the bridge being me. So we put our name above the door because we're accountable, and you can get hold of the owners of the business, the founders of the business.
Now that leads in a nice way, a lovely little segue there to the next question, because if someone's actually interested to this point and they've looked you up, they may be thinking about transferring an existing pension across to you. Can you just sort of clarify that process? What would be involved? Is it excessively complex and difficult and laden with admin? Or is it quite straightforward? And roughly how long does it take?
How long's a piece of string? It depends on what the pension is and who it's coming from. It really does. But with all pension transfers, again, they're all very, very different. And what people should be doing is going to a FCA regulated financial advisor to do the pension transfer, because pensions, some of them will have safeguarded rights, some of them will have bonuses or terminal bonuses or loyalty bonuses. Some will have guaranteed annuity rates. Some will be defined benefit schemes, so we'll have really, really strong, inflation proofing, spouse's pension, guarantees that really need analysing by a financial advisor, by an FCA regulated financial advisor with relevant qualifications, with pension transfer permissions, that really understands pensions, can do a thorough analysis of that pension and say whether it's a good idea to move it, and give guidance and information and advice as to whether it's a good idea to set up a SSAS and move it into a SSAS.
Yeah, that's actually quite interesting, isn't it? So I think what I'll do is not only leave links for your website and your contact details in the show notes when this goes live, but also I will maybe follow up with you after this podcast recording so we can maybe discuss some financial advisors. And at this stage, I just want to be absolutely clear. I think for the sake of transparency, wherever I put anyone's details on a website or in show notes like this or anything, it is not done on a referral basis. There is no linkage financially or in any other way between myself and Nathan and Seabridge SSAS at all. I really just want to help people who have an interest in property investment to get the best in class and access to the best in class and listen to them free of any incentivization on my own front or sort of my own sort of personal basis. So what I will do, Nathan, if it's all right with you, is just maybe keep you online. If you can name check a few financial advisors that could help with that transfer process, that would be fantastic. Because I think anything we can do to help people have an easy transition into SSAS is probably a good thing, right? Okay, so next question is really straightforward. How can property be incorporated into a SSAS pension scheme?
Okay, so when we're talking about property into a SSAS pension scheme, what we're talking about is commercial property or land, not residential property. And property can be a property that somebody already owns, so what we call a connected party property, which is whereby somebody owns it in their limited company or on their own personal balance sheet, or it can be a purchase from a third party. So we can do either of those. If you're buying from a third party, the price you pay will be whatever you negotiate. So it will be the market rate because you've negotiated with the vendor as to the price of the property. If you as a business are a tenant of that property, we will need a RICS qualified surveyor to value what they call a red book valuation, which is your field, Edward. A red book valuation to do a thorough analysis of what the market rent of that property is and also the capital valuation. So if you're buying from yourself, you'll need a capital valuation and to buy at that price so that it's an arm's length transaction and it's seen to be at the market rate to satisfy HMRC's pension tax manual. Like I say, if you're buying from a third party, it is whatever you negotiate.
So what I have seen online a little bit, I do try and stay away from Facebook groups and things like that because I have a temptation to sort of dive in and want to sort of help people and sort of offer up too much and I get tangled up. But what I see a lot is this chicken and egg situation with people that apparently would appear to have quite a bit of money. So let's say something like 250, 300,000 to invest in property, and they sort of declare, yay, I've set up my SSAS, now what property should I buy? All seems to be slightly the wrong way round. What is a perfect scenario for you in terms of someone who is sort of interested in property, someone who's interested in a SSAS? What sort of team of experts have they got behind them, and what order would they be doing things in?
It's interesting. I think that the driver for a SSAS normally is someone looking to buy a business premises. So, an office for their company or a factory for their company, an industrial unit for whatever business they've got. That's usually the driver. And it's then you should be looking at what the best vehicle is for doing that, whether it's a SIP or a SSAS. Or whether you should be buying through a limited company or indeed personally, because there are pros and cons to all of those. So, you need to be speaking to your trusted advisors, your financial advisor, your accountant, to see what the best route for you is, in order that you've got what fits best for you. If the answer is a pension scheme, then we can look at SIP v SAS. But yeah, the driver normally is you would find a commercial property that you want to buy, or you may well already own that commercial property and you want to sell it to your pension scheme to release money to your business and to shelter the property long term from capital gains tax if you sell it, and inheritance tax when you die, so that you can pass that property down the generations in the pension scheme without it touching conveyancing charges, stamp duty, and stay within this family pension trust for life.
Okay, so two clear distinctions there. You can either buy property fresh off the market into a SAS, and as you say, that's generally people that want to operate their business from that property, is the most common sort of thing that you see. And then also people that already own property, but they own it outside a SAS wrapper, and they're thinking about migrating it in, importing it in. And in that situation, especially if they're the tenant, your previous answer, you said that they would need a red book valuation and that sort of thing.
Yes, if it's connected. So if you're going to be the tenant or you're buying the property from yourself, you would need a RICS qualified surveyor. What the Registered Pension Tax Manual says is you need a professional valuation, which in property terms, land terms, is a RICS qualified surveyor. And
you touched earlier on a veto on residential property. Presumably, it's possible to, and correct me if I'm wrong, it's probably quite a useful thing to clarify. What if someone owns a commercial property on a high street and they want to develop the upper parts into residential? Can they, at some point, as long as they get the ordering correct, maybe split the title so they retain the commercial element downstairs, keep that in their SAS, but the upper parts that they've converted to resi, at a specific point there's presumably a trigger and they need to move those upper parts out of the SAS? Yeah, we do a lot of split title. So the pension scheme ends up buying the commercial element, and then people will own the residential element, either on their own personal balance sheet or through the limited company, because a SAS can't own a habitable dwelling. So yeah, we do quite a lot of that work, and that's common. We do a lot of things like pub purchases or shops with a flat above, or a dentist practice or chiropractor practice as I did the other day with flats above. So we have to structure it in the right way, and that comes down to using the right conveyancing solicitors, of which we've got a very, very good panel of conveyancing solicitors that do this kind of work for SASs day in, day out. Okay, that's really helpful. Thank you. All right, so we've mentioned things like financial advisors when you're porting in an existing pension or what have you. We've talked about red book valuations. This all sounds like it's getting a bit expensive. What guide, finger in the air type guides, are you able to give to someone that's thinking about this sort of thing, just so that we can actually sanity check their enthusiasm and give them a bit of realism? Yeah, this is really interesting. There's no we don't have any rules on minimums. So this isn't a product. We provide professional services to SASs. So we provide full scheme administration and trusteeship. So we don't dictate that. However, given the fee of a typical SAS, it's a multi-member scheme, will be something like £1,500 to set one up, and about £2,500 a year to run one. You're not going to do this for a sort of £50,000 property. We're going to be looking at, probably rule of thumb, £200,000 plus, and people might get there through contributions and pension transfers and pooling their money together. And as I say, it's a rule of thumb because last week somebody had a piece of land which they sold to their pension scheme for £50,000, which was the RICS qualified surveyor had valued it at £50,000, and they'll now be obtaining planning permission. When they've got the planning permission, all of the gain will be in the pension scheme, and that piece of land may be worth 7 figures. It might be worth 6 figures. It might be worth 7 figures. So it really depends on the scenario. And often we get people saying, well, actually, I want to buy this,
we're going to have to do some carry forward exercise. We're going to have to make some contributions, but with pension transfers and a bit of planning, our pension fund will quickly build up to, £500,000, £1,000,000. Our average SSAS is about £700,000. We've got, as I say, we've got a few SSASs above 50 million. We've got a few above 25 million. A lot of SSASs are above 1 million. But yeah, I think our average SSAS is around about there. So it's not for the small stuff. It's for people often, and our typical client as well is a sort of business owner, maybe in their 40s or 50s, that has, have got some existing pension funds as a sort of foundation to put some money together, have got profits within the company, want to save corporation tax, so get some, good healthy contributions into the scheme, or bring some healthy existing pensions into the scheme to actually give you that funding to be able to buy a property. And don't forget, a SSAS can borrow as well. So a SSAS can have a mortgage. So a SSAS can borrow 50% of net scheme assets. So if we get sort of, £500,000 into a SSAS with different members, we can borrow £250,000 from anywhere. So, £500,000 in, very crude numbers, but we can buy a property for £750,000.
And are they specialist lenders, or are they sort of high street banks?
Yeah, so we know of independent SSAS mortgage brokers that know what shape of deal banks like, because these are specialist lending desks at banks, often not the main four banks. There are specialist lenders in the SIP and SSAS market that lend to pension schemes and really know pension schemes and understand how they work. So yeah, anyone can lend to a SSAS. A SSAS can borrow from anyone.
So actually incredibly flexible.
Incredibly flexible. And a SSAS can lend as well. So a SSAS can do a loan back and lend to the sponsoring employer, or lend to other third parties.
Yeah. So why then, I think we touched on this at the beginning, but it's probably worth clarification right now, sort of some sort of succinct clarification. What's the difference between a SIP and a SSAS, particularly with property in mind?
Okay. So first of all, a SIP is a retail product regulated by the Financial Conduct Authority, the FCA. So anyone can have a SIP. A newborn baby can have a SIP. The owner of the assets of the SIP is the SIP trustee. So the pension provider owns the assets. So if it's commercial property, it's the pension provider that owns the assets. In a SSAS, it tends to be the client that owns the assets. There's the member trustees. And the barrier to entry for a SSAS, obviously, is you have to have a limited company. So you have to be a company director, have a limited company, because a SSAS has to be sponsored by that limited company. So it's not for everyone. It's a smaller market. The SSAS market is a smaller market than the SIP market. But if you have a business, if you are a company director, you should really be ruling out SSAS before you look at SIP, because they do have more flexibility in where they can invest. Little bit more security in terms of ownership of the asset, and especially if they're multi-members. A lot of our SSASs are husband and wife in business together, or husband and wife and children in the business together, and you get the economies of scale there, because what you're doing is the company are paying for the SSAS fees, so it's tax deductible from a corporation tax perspective. They can reclaim the VAT as well. Whereas a SIP, you're usually taking fees from a tax-efficient pension fund, which we really want to leave as unencumbered as possible. And also, you've only got one mortgage, one arrangement fee, one piece of conveyancing with a SSAS. You've also got the benefits of pooling. So you've got liquidity, so the older members can retire and draw on the liquid assets of the scheme, so can draw on rental income or dividends from the scheme, whilst the younger members can do an asset exchange, build up a share of the illiquid property because they have a longer time horizon. So they're very, very flexible. And our SSAS is actually earmarked, so we have digital earmarking. So we have often barristers and accountants that aren't related, that aren't family members, that will buy through our SSAS because they can buy chambers, or they can buy their accountancy or solicitor practice, and have unrelated members. The younger partners or the younger directors can come into the business, and they can do an asset exchange. So as the older members retire and take their tax-free cash, you have this fluidity in a SSAS and liquidity that you don't get from SIPs. So often you have to sell a perfectly good high-yielding investment, commercial property, within a syndicated SIP to get that liquidity for the older members to take tax-free cash. Sorry, I keep saying tax-free cash. It's now pension commencement lump sum and income. And obviously SIPs and SSASs now have the huge benefit of being able to do flexi access drawdown. So from age 55, or it's going to be 57, you can take what you want when you want from your pension scheme. And also from a death benefits point of view, you can leave the assets to whichever beneficiaries you choose.
My word. Okay, so
sorry, that's sort of in a nutshell. There are hundreds of differences, but for the sake of today, it's just kind of to give you an overview.
My word was not exclamation at the length of your answer. It was that we are 40 minutes in, and I think actually in that sort of 2 or 3 minutes that you've just spoken, you've probably just dropped about 14 or 15 complete gold nuggets of sort of info and intel that are just not commonly understood or grasped by people interested in this space. I think I sincerely hope that what I can do is actually compartmentalize sort of parts of this podcast and just really get them out there in small bite-sized nuggets, because sorry, repeating the word nuggets, that's really not good pro podcasting skills, is it? But then my point is that was invaluable. And hearing about, for me as well, I had no idea about the tax efficiencies of the fees, that actually from a tax efficiency perspective, the fees are far more favourable when you consider how they're paid by a SSAS.
I've got a very, very good, here's one I made earlier, SIP v SSAS guide, which gives you all the technical intricacies of this, so you can see a full analysis of SIP v SSAS in our guide. So I'll share that with any viewers.
Brilliant. Okay, well we can link that in the notes as well if you're happy.
It's on our website as well, so you can go to our website for that.
Okay, well what we'll do, rather than just having direct links to your freebies, as it were, on the show notes, we'll just do your website, and then people can come through your website and build up comms that way. So, well, look, I think we've done it. We're nearly 45 minutes in. It's absolutely flown by. I'm pretty sure that off the back of this, you and I may well think, oh, we could have covered this in more detail, we could have covered that in more detail. And what I'm tempted to do is almost come to you with a hypothetical scenario, if you're up for it, in the new year, so in 2025 sometime.
I'd love to.
Maybe we run through some sort of hypothetical scenario so that people can actually hear how you would onboard a new customer. Would that be of interest?
It would be very much of interest. I'd be delighted to do that. And I think what will be interesting, the onboarding will be exactly the same, but what will be different, of course, in the new year is we would have had a budget on the 30th of October. So there might be some changes to some of the things we've talked about today on pension annual allowances, or changes to some of the tax legislation regarding pensions. So it'll be an interesting update as well. Yeah,
absolutely right. Of course, budget is going to be quite a big bump in the road, and a lot to take from it. Nathan, absolutely. Thank you to Debbie as well for allowing you to give us the time away from the coalface, as it were. So that's Nathan Bridgeman at Seabridge SSAS. Thank you so much indeed. Have an amazing day, and everyone else, thank you very much for listening.
Thank you, Edward. Thank you for having me on.